Hey everybody, welcome back to the channel. If you're new, welcome. And if you are a returning subscriber, thank you so much for coming back. I do appreciate all of you guys being here. Please make sure you like, share, and subscribe. Remember, I am not a financial advisor or fiduciary. I am an investor just like you. I just happen to make YouTube videos. So if you want some inspiration, please make sure you like the video and follow along and join us in the comment section below. And also beware of scammers, spammers, fake pages, WhatsApp. I'm only active on YouTube and Instagram. So make sure you confirm all details. I don't want you guys to get scammed or anything. I try to get them down, but the more the channel grows, the more they pop up. So always confirm via my email. It's always down below. So I wanted to talk with you. I've been getting some questions about this, about how do I react or what do I do when the stock market is crashing? So you saw the thumbnail and I figured, you know what, let me make a video. So the first thing you see is this article from CNBC. I mean, last week, let's be honest, I'm filming this video on Monday, July 22nd. So last week, the markets were red. I mean, let's just be honest, right? It sucks. If you are working hard for your money and you put your money into the market, because that's what you do to build wealth, and the market falls, right? It falls, it's red everywhere, and it's not even just falling. Like you see the article right here, it is falling by 100. Like the Dow Jones is tumbling big time. The S&P 500 is regressing more than that, and it's really crazy, and it can be a little bit scary, right? This is just our human side speaking, because we are human. But one of the things that I try to always remember, and this is a tactic that I learned from Warren Buffett, is that, you know what? When there is a lot of red everywhere, these are great buying opportunities in companies that we feel like we should be investing in, right? I asked a question a couple of days ago or early last week on my channel under my community post. I asked you guys who was buying something on Prime Day. And several of you said yes, or several of you said you were doing both. And if I ask the follow-up question, right, to you right now, you don't have to leave a comment with your answer, but just think about it. What was the main reason why you shop on Amazon Prime Day, right? What was the main reason why you were buying your gadgets or your home decor items or toys or clothing or whatever it is you purchase? What was the main reason? And I can probably assume you would all say because you could get it on sale, right? You can get it at a discount. That's probably one of the chiefest reasons you shopped on Prime Day. Well, something that Warren Buffett said that always sticks to me is that, if you're in a grocery store, you wouldn't want to pay full price for anything that you found of value, right? If you like your Coca-Cola products, if you have a favorite cereal, whatever it is that you like to buy, if you see it on sale, it would make you feel excited. It would make you feel like, you know what, I'm getting something that I love, that's something that is valuable at a discount. Well, our thinking should be the same way with assets, right? When there is blood in the streets, right? When there's a lot of fear out there, that is the perfect opportunity to buy. Now, again, I'm not a financial advisor and I can't tell you what to buy or sell, but any financial advisor, and there's a couple who actually watch my channel, so shout out to you, that agrees that, any type of asset that you love, when it's on sale, absolutely take advantage of that. And yes, like you see in this article right here, yes, the markets were down on Friday, but guess what? Friday was payday for a lot of us, right? Who got paid on Friday? And if you got paid on Friday, that was a great opportunity to buy some really good ETFs or index funds, or even single stocks and companies that you love at a discount. Because let's be honest, I think most of the market was down. So, that was a great opportunity to get, if you were shopping on Amazon, maybe to purchase some Amazon stock, or maybe buy an ETF that has Amazon in it, right? So that you can be an owner and a consumer. So that's one thing that I do. But again, I just wanted to point out this article because, yeah, the S&P 500 slipped, 1.97% last week, and the Nasdaq slipped even more at 3.67. And again, a lot of this was rotation out of tech. Let's be honest, right? Tech has really been holding up the market year to date. Technology, your Nvidias, your Microsofts, your Apples, your Googles, all of those types of companies. Those are the companies, the Magnificent Seven. Those are the ones holding up the stock market year to date, right? Because let's be honest, the economy is not in the best place right now. And so, I wouldn't even call this a crash, to be honest. This is a correction. This is a pullback. We should be like hooraying this. You never want to see the market just constantly go up and up and up and up and up. And there is no type of correction. There's no type of pullback. That is not something that an investor who's been doing this, I would say at least 5 years, we want to see like corrections, because that's a healthy market versus just constantly going up and up and up. And keep in mind, like, I'm gonna pull up, look at this right here. You see this? Look at this. If you look at the past 5 days, this is the S&P 500, just simply coming to Google. I'm not in some fancy website or anything like that. I don't have some fancy chart. This is literally Google. I literally typed in right here, S&P 500. If you come at the past 5 days, yes, it's down 2.36%. But when I see the markets red, right, this is how I encourage myself. And I put in the thumbnail that our accounts last week fell about $15,000. All of the accounts, but in a grand scheme, and this is what I'm talking about in today's video, when I zoom out, that's really just a small percentage of our overall portfolio. Because if I come out to the past month, right, it's still up 1%, which is not bad considering it fell a lot last week. The past 6 months, the S&P 500 is still up over 13%. And year to date, from January 2024 until now, July 2024, look, it is still up over 16%. So when you zoom out, you'll see, you know what? Okay, yeah, it fell last week. Yeah, there was a correction, but year to date, it's still doing really, 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 really good, right? If I come to even the Dow Jones, so this is not as tech heavy, right? And I see last week, the last 5 days, okay, it fell. You can see right here, it fell, but it's still in the green the past 5 days. Look at the past month. It's up over 2%. The past 6 months, up over 6%. Year to date, almost 7%. And to me, I think the Dow Jones accurately represents what the market should be doing right now, considering, again, inflation, the jobs numbers and the jobs report, and all of that type of information. Again, we want a healthy market, but the S&P 500 is heavy in technology. So that is really what has been driving up the market. But even with like these dips, if you buy and hold and continue to do what you're doing, long term, it works. And look at the Nasdaq right here. Yeah, the Nasdaq in the past day or 5 days is red, right? But if you come out to the past month or the past 6 months or even year to date, look, year to date is still up 20%. So again, you zoom out when you feel like, you know what, I need a realistic depiction of what's going on. Because like I said, yeah, our accounts were down about $15,000 last week, but we didn't lose any money because I didn't sell anything. If anything, on Friday, we just continued to invest. So that's how I motivate myself. That's how I keep myself encouraged when there's a lot of risk. So I don't sell low. You don't want to, buy high and sell low. You actually want to do the inverse. You want to buy low and you want to sell high. And another thing that I do is go back to my spreadsheets. I love tracking, and this is the reason why I love it. It's because when the market is red, all I got to do is just come on over here and just see all of our assets in one place. See, you know what? We really are doing pretty good. Yeah, and the market is down right now, but we are doing pretty good. And this is why I track everything. Like, how do you guys track your investments? Do you use a spreadsheet like I do? Do you use a book? Let me get my dividend book. I have a dividend book right here. You could grab yours up on my website. Information is always down below. And I have on my Amazon storefront, I have the physical, so you can get the physicals if you want. Or do you keep track of it in a notebook or in a planner? Or do you do all three like I do? Because I just really like to see all of the details and everything. And so that's how I'm able to stay focused. That's how I'm able to stay consistent, even when everything is going to the crapper, right? And it gives me a very realistic view of, yeah, the market is down, but long term, it's still up. At the end of the day, it's still up, and we're going to continue to invest. And remember, long-term investors should be looking at 5 to 7 years minimum and then out, right? You shouldn't be expecting a 20% return in 1, 2, 3, even 4 years. That's not really realistic. You want to make sure you're looking long term. And again, if that's not something you're comfortable with, that's why there are money markets and high yield savings accounts and CDs where you can maybe want to put your money there if the markets are just too scary for you, which I get and I understand. But if you're long term investing, you should be thinking 5 to 7 years out and further, right? Some people even say 7 years or more is long term investing. So I just wanted to come on here and just encourage you guys to keep investing. Yeah, we may have some more red days. We have a presidential election coming up. There's more economic news that has to come out, inflation data, and so it can really seem daunting. But year to date is what we're looking at. Year to date is what we're looking at. You want to buy and hold because you want to be a part of the number that's increasing their wealth. And the only way you can do that is to research and believe in what you buy and continue to buy, like the dollar cost average. Every time you get a paycheck, that is what you do. That's what we do, and it's been working 10 years now. Wow, 10 years. I'll be 40 in September, so it's been that long. So let me know again down below, how do you track your investments? How do you stay motivated when market is red so that we can encourage some of our newer investors and this community that we have over here on my channel to continue with the process. Do not give up. If you're in this for a few months or a year or even 2 years, give it some time so that you can see that it does work over the long term. So again, guys, thank you so much for watching. If you want to join our private finance and dividend group, we do meet this coming Saturday, July 27th at 6 p.m. Eastern. And even if you cannot make the actual group session, you can watch the replay. So if you want to join us, information is always down below so that you can sign up. Again, thank you so much. And until next time, I'll see you guys in the next one. Bye-bye.